Everyone, I hope you're all enjoying the return of the XRP updates. I hope today is going swimmingly for everyone. Please subscribe and follow if you haven't done so before. Get the inside scoop on crypto before it's popular on TV with this channel. Almost no one is discussing the recent major event that occurred with XRP. The biggest interdealer broker in the world has just added XRP trading to its platform, joining a select group of institutions that utilize it before shifting trillions of dollars between different asset classes. Concurrently, Ripple has unveiled a platform that has the potential to radically alter the way in which big capital allocators gain access to digital assets. Nearly no one spoke when an ETF decision involving a major global asset management passed its deadline. Furthermore, Swift has been subtly hinting to the future of the world's financial backbone. You are looking at the numbers all wrong if you believe XRP adoption is decreasing. The current state of affairs appears to be more akin to the quiet before a structural institutional period starts. At a macro level, let's start by getting a feel for things. This moment in the global liquidity cycle is unlike any other. In an effort to curb inflation, central banks have been actively tightening monetary policy for the past 2 years, reducing system liquidity and squeezing risk assets. On the other hand, structural debt levels are still at historically high levels, fiscal supremacy is on the rise, and the rate of tightening has slowed. We owe more than $300 trillion on a worldwide scale. Governments risk their own fiscal stability if they maintain high real rates forever. Because of that fact, liquidity accommodation will be the default in the long run, even if it comes in spurts instead of a steady stream. Liquidity growth has been the driving force behind every major asset cycle in the contemporary era. The housing and credit expansion of the mid-2000s, the NASDAQ boom of the late 1990s, the QE era after 2008, and the tech and crypto surge spurred by stimulus in 2020. For all boats, liquidity is the rising tide. Capital doesn't merely pour into stocks and bonds as liquidity grows to encompass digital assets as a legitimate asset class. The money goes into systems that can settle value instantly, assets that are tokenized, and blockchain infrastructure. This is where XRP makes a triumphant return to the discussion. The XRP marketing campaign frames the cryptocurrency not as a retail meme asset, but as a platform for the movement of wealth. In a world where cross-border settlement speed, collateral optimization, and capital efficiency are of the utmost importance, that positioning becomes more and more relevant. The announcement that started this whole thing off deserves our attention now. You may now trade XRP on TPICAP Group. This listing is not for a retail exchange. There will be no marketing collaboration here. TPICAP ranks among the most significant global providers of over-the-counter price data, is the biggest energy and commodities broker, and ranks first among interdealer brokers worldwide. At the heart of institutional markets are interdealer brokers. The unseen infrastructure supporting sovereign debt, commodities, rates, and foreign exchange is provided by these intermediaries, who sit between banks, allow large block deals, and maintain liquidity for complicated securities. No major financial institution ever starts with a retail app when seeking exposure to a new asset class.